Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Sorry, I'm having some technical problems. That's why I'm a little bit late. But hey, it's Wednesday. Wednesday could be a good day, maybe. I don't know. And Wednesday's always an active day for the markets, but we'll see if we get anything super interesting. Let's see if I can fix my light here. Aha! Okay. The charts. So we had a little bit of a fallout yesterday in the treasuries. A lot of it after we were gone. But, well, you know, it was like that 8 o'clock time period, right? So we kind of missed a good trade. It's okay. Didn't really move too much after that, so it's kind of flat. And then look, what kind of comes back. So nothing too interesting there. Yesterday, though, pretty strong rally in the S&P 500. I mean, very, very clear break of that downtrend. But will it continue today? Who knows? We got oil. Oil still kind of signaling some concerns about global growth. Gold and silver not looking particularly great. Of course, because the treasury is selling yesterday. And copper taking another dive. Copper taking another dive. Here we got Bitcoin. I tell you what, you know, like, so this whole run here was because of like the ETFs, right? But it's I don't feel like they got as much out of it as they should have, and they're just kind of chopping around here now. It's a little odd to me. I just yeah, I don't know. It's not dragging in the kind of the FOMO that I would expect. Here's the dollar having a really strong move here in the last couple of hours. So coming back over to our screen. Treasuries in sell mode already. Oh, we did have wholesale inventories here. Nothing too significant though. Oil. They also, again, we have at the market open. It's at the market open. We're going to have Powell speaking. So market's kind of waiting for that. Come in here. I don't know. I kind of feel like I'm missing some stuff. So I'm going to double check my news sources and so forth. News squawk is still being weird for me. I don't think there was any like super significant developments overnight, but well, here's an interesting story. Leading economists, Federal Reserve presidents, and most investors pay close attention to the shape of Treasury yield curves. They follow them not necessarily because they care about the inner workings of the bond market. Instead, they are proven predictors of recession. All 6 of the last recessions were preceded by an inverted Treasury yield curve. Most treasury yield curves have been inverted for over a year, but investors and pundits are questioning whether this time is different. Might the current yield curve inversion lead to continued economic growth and skip a recession? We argue it's not different this time, but the situation is unique, and I would agree with them. The situation is unique, but we probably are going to go into a recession. I don't think that the yield curve is necessarily screaming recession, but when I see it start to steepen back out, then it is. Then it's like, oh no, it's over. We caution, however, the pandemic, recession, and recovery have been incredibly unique in their economic effects. We encourage humbleness. While a recession is likely, there are still benefits to yesterday's stimulus coursing through the economy, which is incredibly difficult to estimate. Yep. I think the same thing. That, like, we put so much stimulus into the economy, and we thought, like, oh, well, okay, but all of those stimulative measures are gone now. But I think the reality is that they still have residual effects, and some of them are still there. Most prominently, the student loan debt thing. That's like a huge piece of stimulus, and everybody just forgets about it in that analysis. Oh, I'm running out of storage. I know what that's about. Oh wait, is it on the C disk that I lost? Yeah. Okay. Okay, so first thing is, dude, I need to get like bigger hard drives. I got like a 20 terabyte hard drive, but like I need like all of my hard drives need to be super big, I think. Okay, so first thing is Ninja Trader here. Okay, that should help. Delete DaVinci Cache. That's pretty big. Yep. Yeah, that'll free us up. I tell you the technology these days is kind of crazy, because like you come in and you, like, for instance, you want a graphics card. Ever since the 20 series of graphics cards, the computer games haven't changed that much, and so you're getting incredibly powerful graphics cards, you know, and so everybody kind of feels like, oh, you can just build them like this most powerful PC, you don't even need it, right? But what I think they don't realize is once you get into certain kind of applications like video editing, for instance, you need so much disk space for video editing and fast disks. And so they're all like, oh, it's overkill, but actually it's not. It's not overkill. And then when you want to do like quantitative processing and stuff, yep. You want to have lots of RAM. You want to have fast processor. You want to have fast disk. Jeez. Oh, by the way, we should also check here. So we had this issue yesterday where it wasn't letting us select our account. Okay, that is not a problem today. This might take a little bit because it's trying to delete 78,000 items. That was a quick little kind of turn back up. So one of the things that I'm watching here today is we're like in the last 3 days of the month. And I suspect that there could be some rebalancing flows. So yesterday's buying was a little bit like, because I'm expecting going into the end of the month that they sell. So we'll see. We'll see. Almost there. There we go. All right, now how much do I got? That only freed up 6 gigabytes, huh? No, something's still missing. May just be those files I'm analyzing, though, I moved over. No, I haven't filled the 20 terabyte hard drive yet. I'm using... How much am I using of it? Oh, it's not 20 terabyte. It's essentially 4. It's 4 terabytes. It's 4 terabyte hard drive, and I'm about halfway full. So I downloaded. So we're trying to get like this volume profile data. I was able to get a data set from somebody, but the data set included a data set that had like the full level 2 data in it. And so it's literally like 200 gigabytes. And then I on that hard drive, I record every session and I save it there. Right? So that actually fills up, like I can fill it up in a month and a half, and then I have to clear it. So yeah, I'm using the data, but I think I'm gonna need to go. I mean, I cleared enough that I can trade here and everything, but like nothing's going on. So maybe let's go into here. Let's do some Winder strat. Winder stat. Because I don't like seeing that at 98%, right? I'll let that run over there, and I need to cover the screen with it. how do you trade, bro? So basically what I do is I figure out if they're going to buy or sell it that day. That is to say, like, the market as a whole, is there going to be more aggressive buying or more aggressive selling? And then if they're going to buy it, I buy it before them. And if they're going to sell it, I sell before them. And then when the orders that I'm expecting have come through, I take my profits. That's how I trade. And I figure that stuff out by using informational inefficiencies, things that we know about the market that can potentially predict the future orders. So one edge that we have here that most retail traders aren't thinking about is that the risk parity funds, which are a fund where you have a certain amount in equities and a certain amount in bonds, equities have performed extremely well relative to bonds in the past quarter. And so they're going to have to sell their equities and buy bonds. That's why I'm on the lookout over here for buying trends. I don't know if it's going to be a huge factor today, but it's probably going to be a factor Thursday and Friday. And I would expect, so that alone does not effectively predict, like, are we going to be up or down on the last day of the month per se? But probably in the closing auction on Friday, equities are going to sell. Probably there's going to be a sell imbalance on the closing auction on Friday. I think I've got another big thing somewhere, because I don't know. But what I think I really need is I need one hard drive that's like one SSD, because I have like an SSD and then I have like an archive drive. And what I need is I need two SSDs. So I can have one SSD that's like all of the programs and another SSD that's primarily for like the data that I'm working on at that time. What else? Oh yeah, I was thinking about Chandra Shekhar. The other thing is there's going to be a bunch of central bank people speaking together in a forum when the market opens, and so the market might be a little bit quiet until then. And that's why I'm not sitting in here and I'm like, oh, I want to trade, yada, yada, yada. So people are looking for patterns. It's kind of funny. I don't know if it was that Reddit thread or what. I would think probably not, because I don't think that the futures trading subreddit is that widely read. But over the past day or so, I've been like getting a lot of messages and speaking to, there's a couple of new people came into the Discord, things like that. And so, you have to go back and explain things to people. And I had kind of almost forgotten how obsessed people are with patterns. Everybody wants you to share with them a pattern. They want you to say, okay, so I want to see first a break of the high of the day, and then I want to see it break past this level, key level from before the break, and then some sort of a pullback, and then I go short. That's what they want to hear. And if you tell them that sort of a thing, they love you, because that's like, oh, I can follow that. I just have to remember that pattern and look for that pattern. That's all I have to do. And trading don't work that way. If you try and rely on patterns, you might have success for a little while, but those always get destroyed, especially if it's something that you learn from somebody online. Any effective strategy that's actually being shared out there is going to get destroyed. So I had one guy yesterday that was telling me They wanted they were like an intern, and they wanted to impress people on the trading floor at one of these banks. And they're like, well, so I know smart money concept stuff, so now I want to learn about the dumb. I'm like, no, forget the smart money concept stuff. They'll laugh at you. They won't laugh at you. Actually, I tell you what, the traders, they're really smart about it. If you go to a pro trader that like trades at JP Morgan or Goldman Sachs or something like that, right? And you tell them, oh, I really like these chart patterns and this stuff and that stuff, they'll be like, okay, that's interesting. They won't straight up tell you like it doesn't work or that's dumb or anything like that. I'll tell you, like, probably drop it. They won't take you too seriously. But they just kind of note it because they know that like that's what people tend to look for, and it is possible to find an edge in that respect, especially if it's like you're the only person trading that pattern. That's a different thing. If it's a pattern that you came up with and you're the only one that knows about it, that's a different thing, right? But they just kind of know and will kind of try and gently guide you towards the stuff that they use to trade, right? So it's kind of interesting how that goes. Anyways, but I told him, I was like, don't just forget about the smart money stuff, because they're not going to take you too seriously if that's what you try and share with them. This is taking a long time for it to analyze my disk. What's with that? I don't know. You know what though? My water, I did not get fresh water. So I'm going to go and do that real quick. Okay. All right. Trading tips? No. I would stay away from that sort of a thing with yeah. It's just like Jim Cramer. Like I tell you what, like everybody makes fun of Jim Cramer, and he has made a couple of really bad market calls. I think that he, as of late, has been trying to make macro calls that like nobody can really realistically make. Okay. But like, he did have success in his hedge fund, and he does know how to value companies, and he has a process that's like really effective and works. It's just that if you're going out and making a call on every stock that's out there, right, then whatever kind of edge there actually is just gets taken out. He's too popular. He's too popular. You cannot make money from following somebody else that's popular. It just doesn't work that way. You know, like I would like to make a service that's kind of more. Oh, that's where those are coming from. I was like, I had a little white streak on my thing, and I was like, where'd that come from? It's because there's chalk on my thing. Get rid of that. Anyways, you know, like I would like to make a newsletter. You could pay like $5-10, and then you would get before the market the things that I'm looking at that might predict orders. And I may do that. But if the newsletter got over like 200 subscribers or something, I would have to shut it. Like, because too many people trading on that could ruin the edge. Too many people following me could ruin the edge. I think there's more room for what we're doing than what most other day trading YouTuber influencer people might have, because we're trading the treasuries and because of the kind of edges that we're trading. Like, you can size it up as bigger than most other things could, but there's still a limit. Yeah, crowded setup. Exactly. Smart Money Concepts is a crowded setup right now, according to my data. It is still analyzing my drive here. It's like just slow because it's getting into lots of little files, I think. RAM usage 267 megabytes. I haven't skipped any frame cells, so that's good. Switching video cards to a video card with the new encoder really helped there. Dollar go up, S&P go down. Well, the S&P doesn't look like it's really been too affected by this stuff overnight, right? I don't know what it's going to do today. Again, I'm not expecting too much until after they're done. They're having this big central banking conference, and so like all of the major central bank people are doing a panel in about 30 minutes. I don't know if it's anticipated that they say anything market moving at this conference, but it is there on the schedule, and I think is probably going to dampen activity. Fill the gap? Yeah, I don't care. I'm not, gaps don't, I mean, gaps are an interesting one. When you're talking about something like a gap, right? Something weird has to happen to create a gap, right? And so you get particularly interesting statistics looking at gaps. The truth is that gaps do tend to get filled eventually. You might not know when they get filled. But it's like a 95% chance that eventually that gap does get filled. It's true. It's true. But any kind of strategy that you build off of that, it's random from all of the things that I've looked at and tested. And you realize when I'm back testing something, you know, like I'm using machine learning to like test all of the different possibilities of it, right? So that I'm really confident that if it doesn't work, it's not because there's some tiny detail about it that I'm getting wrong. It's because the actual setup just doesn't provide an edge, right? Okay, so Walter, on data, you need depth of market. You need the depth of market data. So with Sierra charts, they are kind of like their own full shop now. Like they have their own data provider and all of that stuff. So yes, it's called Denali, and that's what gives you the full depth of market. I don't know why you're calling it external data, but yeah, you need a data provider that's giving you full depth of market. And for Sierra charts, it's like, you know, an extra $30 a month add on to what you're already paying Sierra charts. Unusual Wells tweets a U.S. recession is coming this year, according to HSBC. People had kind of backed off on that there's going to be a recession next year, and now they're kind of piling back onto it. Okay, you said that when huge orders get filled, it creates a liquidity hole, drawing price out for some time. Well, wouldn't gaps be the opposite, keeping price away? So no, that's good thinking. But the key question here is why does it happen? Okay, it happens because of low latent liquidity. Now I use the term latent because I don't want people to think that what I'm looking for is an area on my DOM where the resting liquidity is lower than other places, right? Because most active participants don't want to show their intentions to the rest of the markets. And so if they are going to provide liquidity, for instance, they don't show it until it's about to be executed, right? And they could show it over a period of time that, like right now at 30, there's only 548 contracts, right? Could be that they trade those 300 contracts and then some more contracts show up, right? And so that's what I mean by latent liquidity. It's the liquidity that's out there and it's willing to trade, but you can't see it resting yet, right? But you can get into these situations where it ticks up, there's only 200 contracts. It ticks down, there's only 300 contracts. And it does that for a long time, and you're never able to get the market makers to really put up a whole lot of liquidity. And if they do tick up, it pulls, and only a few orders are required in order to make it move up. And you'll kind of get this range where it's like that. It's just able to move across that range really, really easily. That is low latent liquidity, right? So one of the things that can create low latent liquidity is a lot of volume having traded in that location really, really quickly. So like there was a really huge market order or there was a really huge iceberg, then there's a tendency for them to kind of get like pulled back into it, right? But another thing that can cause it is a sweep. If you just sweep across a series of prices very, very quickly, all of the market makers freak out. They're like, oh my gosh, what's going on? I don't know if I really want to take on risk here in this location. And so they kind of stop providing liquidity. And so those kind of like those sweeps can also create those same areas, right? So that's why I was saying, like, for instance, was it yesterday or was it the day before? We had this trend that moved up and it was quite quick and we weren't sure what it was, but I now think that it was a tweet by Nick Timros. It moved up very, very quickly, right? Well, because it moved up so quickly, all of that area behind it where it moved through very, very quickly is going to be a liquidity hole. And ergo, it was very easy for price to get sucked back down in reverse after that flow was done, right? So that's how both of those things can kind of lead to the same result, which is an area of low latent liquidity that you kind of get sucked into. Okay. But the other side of this is if you're talking about gaps, like for instance, right now, okay, we had a big move up yesterday in the S&P 500. Well, so first of all, I don't know what you're calling it a gap, because, if I look at it on my daily chart, for instance, it's not a gap, right? There is a gap here on the 10th over the weekend, but that was because it was a holiday weekend, right? So is that a gap that has to be filled? Well, maybe eventually, who knows, right? But that was like 2 weeks ago. It's not relevant anymore, right? Well, after 45 minutes, the latent liquidity, if the latent liquidity is damaged in an area, 45 minutes, maybe 90 minutes at the most, it's healed. It's no longer relevant. Okay, is there any use of VWAP? So VWAP is an interesting one. I would put VWAP in the category of the edge has largely been arbitraged away. So it used to be that if you needed to execute a bunch of volume, right, big order, that you would use some sort of TWAP VWAP algorithm where, based on where we are relative to the VWAP, you would execute more aggressively, essentially. So if you're buying and we're below the VWAP, then you would buy more aggressively because you're getting a better than average price at that point, right? And kind of what happened was the traders at the exchange figured this out and started messing with it. And they would, they loved it when the big institution was coming in and buying below the VWAP because they could just keep pulling their bids lower and lower and lower, and it would just keep trending lower and lower, and they know that somebody would buy it from them, right? So they weren't getting a whole lot of efficiency in terms of execution from using the VWAP. And then in 2000, basically 1999, Almgren and Chris came along, and Almgren and Chris kind of showed that if you base your execution around minimizing your impact on the liquidity, that you execute more efficiently. And so it's better to just have like a random schedule where you take breaks to allow the liquidity to recover. And that ended up giving better performance than the VWAP trade, right? So VWAP is not used as widely in the industry as it used to, okay? And the kind of the patterns, like that's the other side of it, is like, okay, there's a VWAP. Does it help you to buy above or below the VWAP? Not really. But then you could say, well, okay, but maybe the VWAP still has some important statistical properties about it that you might be able to take advantage of, right? So for instance, if we have been trading above the VWAP for some time, and then eventually that trend dies out and we pull back to the VWAP, there's a very high probability that the first time that we come back, it will bounce off of that VWAP for a few ticks, right? It's absolutely a thing. Most of the time, it bounces off the VWAP, and that's like the sort of the trade that most VWAP traders are trying to take, right? But if you go and you do the back testing and you do it over a wide enough data set, you'll find that there's actually more money in the situation when it crosses over the VWAP and keeps going, right? So it has a fat tail, right? It bounces off of the VWAP most of the time, but when it doesn't, you lose more than you make from when it bounces. So, yeah, I mean, I have a VWAP on there and everything. I used to pay attention to VWAP a lot. I had like my VWAP bands and stuff. I don't really pay much attention to it anymore. The 45 to 90 minute dynamic makes it seem as though big traders are time limited in their positions. So I'm not quite sure what you mean by that, but if I'm a market maker, right? I'm providing liquidity, and then all of a sudden I get filled on 10,000 contracts, right? Well, I don't necessarily want to have 10,000 contracts, right? I don't necessarily want to have too much inventory on at a time, right? So I might stop putting contracts out there so that I don't get even more contracts filled. And I'll only put orders out there that will reduce my inventory, right? Like if I just ended up buying a ton of it, then I'm only going to put sell offers out, for instance, right? And the reason it's like 45 minutes to 90 minutes is that's just kind of like how long it takes for like those market makers to kind of rebalance their positions, for, you know, all of the other traders to kind of like, you know, do their thing, more people to come in, stuff like that. Because like another way of thinking of it is all of those people are filled. Now you need new people to provide liquidity in. Well, it takes time for those people to come in, and it decays. It decays on a this is where it gets complicated. It decays on as a 2/5 function. But that's why I just say 45 minutes. This is like when you actually do the math out in the treasuries, it comes out to about 45 minutes most of the time. There's usually a little bit of randomness around it. Like if there's going to be another leg, it'll be like 45 minutes and give or take 20 minutes so that, you can't predict when it's actually coming. That's Seth's explanation. If you ask 10 different traders, they will all have their own theories. Well, what I'm telling you is all based off of very well-established research, right? So the thing that's my part is, here's why this matters to you, right? Here's how you can potentially use this information to avoid certain trades and take other certain trades, right? That's my part. That's my interpretation. The thing that I'm contributing here is that I'm really the first person in the retail education space to take this advanced knowledge that the institutional traders have been using for like literally 30 years now and translate it into something that can help you as a retail trader. That's my contribution, right? Okay. But the actual research, the actual stylized behaviors that I'm talking about, these are like general facts that are quite well established and proven, right? So if you have a large meta order, the impact of that meta order tends to follow a square root law. And then when that meta order is done, the impact will decay by a 2/5 law. So you get this. Zoop, zoop, like that, right? And I'm saying this, it's 2/5, so it's like, it's actually 1.5 times this, or sorry, 2.5 times this, 2.5 times this, tends to come out to 45 minutes. My theory is, well, so, okay. Wish he hadn't said that. Wait, what is it? Is it move important to focus on who is failing in the market, who is becoming trapped, and by how many contracts to figure out direction and magnitude of price movement? If 5,000 contracts trade and price moves down, buyers fell, then should it be expected to see those failures and jump out and send price falling further? Okay, so current positioning is a important factor that can possibly predict future orders. But there's two major problems with it. Number one, we do not get enough data to really effectively sort out what the people's positionings are from the trade that's already happened, right? Like if I see 5,000 contracts trade, I don't know if that was a new position, if that was exiting a position, if it was a hedge, a speculation, if it was, how many retail traders, day traders are involved in that versus long-term players, right? We just don't have that data. We can only see who was the aggressor. Was the market order a buy or sell? That's all we can see, right? So we don't really have enough information to sort out what the positions really are in most situations, unless it's like really extreme, right? And the other problem, hold on. The other problem is that the market orders, if I need to come in and I want to buy 100,000 contracts that day, right? That just overwhelms everything else, right? So yeah, there might be retail traders, they're trapped in a certain location, yada, 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 but it doesn't matter because there's going to be tens of thousands more buy orders coming in, right? It's just going to keep pushing it. So, and that's kind of like one of the things that really frustrated me at first and took a long time for me to accept. But the reality is that the new orders can just come out of nowhere. They can just come out of nowhere. And so and when that happens, it makes everything else that happened prior to it irrelevant. And this is why these sorts of like trying to look at past patterns and volume and stuff like that is not really very indicative of what's going to happen in the future. But that we do still get trends because those buy meta orders, they take forever to execute. And so, they're buying now. An hour from now, they're probably still going to be buying. Right? Okay, so Mr. M said, my theory is the futures market is only about price discovery. A trader just needs to know what it is trying to discover, when and where. So I wish he hadn't have said that, because it's a theory, but number one, what evidence do you actually have to back that up? And the counter that I would put is that I think that we have a pretty substantial amount of evidence that contradicts that. That says that that's explicitly not what happens. So why do I say that? So if I need to buy 100,000 contracts again, that's going to move the market, right? And it's going to move the market by a certain amount, right? So I don't come in and I'm like, okay, this is the correct price and I need to go in and discover it. No, what I do is I say, are more people going to buy or sell in the future after me, right? And if they're going to buy, then I go long, right? And I ride that wave. And so how far it goes is a function of the orders that get put into it. So if a large hedge fund needs to rebalance at the end of the month, they're not trying to discover a price. They're just trying to get the appropriate number of contracts sold that is required by their strategy, essentially. And so the move, for all intents and purposes, is random, which is to say, order flow can be informed, but even if the order flow is not informed, it still has permanent price impact, right? It'll move it up, it'll keep it, and then price stays there unless somebody sells it the other way, right? And so not all movement has information in it, essentially. So what are they trying to discover? The reality is that most of the orders that are placed into the market are not trying to discover some fundamental price that they think is there. That is a concept that retail traders have come up with in their head, and it totally makes sense from the way that we approach investing and everything else. There should be a fundamental price, and I want to figure out what that price is and everything, right? But the reality of the way that the market works is on a short time frame, that doesn't really apply. That doesn't really apply. Another way of approaching it is when I'm looking for when I'm talking to a trader and I'm saying how do you trade and what are you looking for? If they mention anything about patterns as entries predict what's going to happen next, and B, value, some sort of fundamental valuation or something, then I know that they're probably struggling, right? Because that's the evidence that we have, just says that's not how it works. Right? Of course, I'm on a different page from 99.9% of retail traders, because they all believe these things that we just know aren't true. That's the thing that I think is so devious about it, is that when you come in and you say, okay, not knowing anything about markets, and you're trying to come up with your own way of trading, the first 100 things that you try are almost guaranteed to be a failure. Like all of the natural intuitions of a human on how trading should work are wrong. Why is that? Well, it's because of the competitive nature of the market. If somebody else has tried it or seen it, they start trading on it, they get large enough, they eliminate the edge. Right? Strategy gets out there. If people have tendencies to do certain things, then we figure out what those tendencies are, and the edge is already gone. Right? Is there any indicator that will give a good insight? Well, so in terms of indicators, so again, we don't want to look for patterns, right? Okay. But that doesn't mean the indicators are useless. There can be, they can kind of alert us to current conditions. They can kind of give us information. And the one that I think is going to be the most useful to you is cumulative delta, because cumulative delta tells you which side is being more aggressive. Is it the buyers or sellers? So what are the market orders coming in as, right? And that is the best indication that we have of informed trading. You come into the market and you see a consistent move up or down in cumulative delta. So let's come over and look at this market right now, and you can see pretty consistent downtrend in cumulative delta for the treasuries. So far today, I would say it's pretty, well, it's about 10,000 contracts since the start here, I guess. But generally speaking, it's a sell, right? So that tells us something, right? The market orders are selling, and there is, again, so stylized behavior of markets that, when you have an imbalance like that, it tends to be persistent, meaning that at about an hour from now, chances are we're probably going to continue to be selling, except for that we have this Federal Reserve meeting thing in 7 minutes. So maybe it doesn't matter in this instance, but you get what I mean, right? So that's the first one. Okay. Second one that I would recommend that you take a look at, and these, I include stuff for these in my indicator package. Okay. So I'm not trying to sell my indicator package because maybe you're using a different platform, right? What do you look for, right? The next thing that I would look for is like correlations. So one way of looking at correlations is a spread, right? To see how two assets that we know are closely related are moving relative to each other, and that can tell you things about what's going on in the market. Especially when you come into the yield curve, that can kind of give you a certain picture about what the economic conditions the traders think is happening at that time, right? Okay. The next one that something that you would want to factor, and these all kind of go along with the factors that you should really involve in your strategy, right? So the next one is some sort of a measure of volatility. Okay. And of course, you can use the VIX or the MOVE index for bonds, but we don't really get live data for that. But something that you can use that is really incredibly effective is ATR. That's this indicator down here. So I have my own version of ATR, because normally ATR just tells you, like, in points, what is the average true range. Like the average true range in the S&P 500 is X. Well, let me come over to ES over here. Oh, I don't have it on that form. Normally it would tell you like 20 points, right? This one right here, it's telling it to me in percentages, right? So the average true range in the S&P 500 right now is little over 1% a day, right? And so it shows you the range of each day, the ATR, and you can change the ATR between percentages, ticks, or points, right? So that's my indicator. And this kind of tells you what the volatility is, because we know that there are stylized behaviors in volatility, right? Like that expected volatility tends to be higher than realized volatility. When we have areas of elevated volatility, it tends to cluster. Things like that, right? Okay. Why is the correlation edge taken away? Wouldn't it be easy to unmate for big firms? It's true. So when I'm talking about correlations, really what I'm saying is you're looking at the correlations as something that has basically already been arbitraged out of the market, and you're kind of just relying on that to make sure that you're in line. Does that make sense? Like, if all you did was to trade based off of a correlation, as a retail trader, probably you're not going to make money, because that edge has already been won. There's some algorithmic trading firms out there that are very, very fast and very good at trading that. So the edge will always be there, but you might not be able to take advantage of it, right? But that doesn't mean that you want to trade against it, right? And so I would still have something up there, keep track of the correlations, and especially, you know, like how the correlations are kind of shifting a little bit, right? So and that will help you avoid bad trades, essentially. So it's kind of like that's base, right? That's why I say, like, all of those things, that and volatility and what you see in the order book, like the cumulative delta and changes in the resting orders, that is like base, right? And where does the edge come from? The edge comes from the informational content that you can't get on the exchange. Things about what you know about large institutional strategies and larger positioning and economic numbers and what members of the Federal Reserve are saying and all of these sorts of things that might help you predict future orders. That's where the real edge comes from, right? What do you think about 3D depth of market? Yeah, I've seen that. It's cool. I don't think it really tells you anything that you don't see on here, but it's still cool. Like if I had it, I would definitely show it on the screen, right? But I'm deeply skeptical that it would provide any edge to you that you can't get from just watching the DOM. Which is how it comes out a lot of the time, isn't it? Okay, so I gotta come in here. I want to see, like, where is all of my disk space going? Okay, so why do I have such a huge page file? For starters. Oh, I shouldn't have clicked on the image. I should have just done it from folders. Oh. Oh, that's my Jigsaw trading depth history. No joke. Maybe I should delete that. Seems like there's more. You've never seen 3D depth of market? Yeah, there's this guy that's trying to develop it. I think that he's been mostly doing it with he's been mostly using cryptocurrency stuff to test it. I haven't seen anything about it for like a year, but whatever. Okay, so it seems to me like the reason I'm low, the reason I'm low on space is because of my data in here. Half of it is app data. Half of it is documents. And in documents, it's my NinjaTrader in Jigsaw. So maybe, I don't know if I really care about keeping the historical depth. Because I'm kind of like outputting everything from NinjaTrader. I don't know, but maybe someday I might find it useful. So maybe I should, you delete yours once a month. It's definitely in NinjaTrader 8. It's the DV. I should probably do it once a quarter. And since we have like cleared through all of the, I don't know. For now, I think that I have enough space to work with that I'll leave that alone. What are some of these larger files? I'll leave that alone until after I've done some of my videos. Oh, those are downloads. I should clear that out. Yeah. Like, because I have that, I downloaded that Waves plugin and then I kind of was like, nah, I don't care anymore. Yeah, let's go delete that. Oh, and I reinstalled Soul Calibur. That's right. Delete it. That'll free up a couple more. This one I actually want to save, so put that somewhere else. I haven't. Oh no, there's a Soul Calibur 6. Yeah, there's a Soul Calibur 6. It's pretty good. I don't think it's as good as the other Soul Caliburs. It's a little bit too much rock paper scissors, but. Oh, I should do it by height. That's what I should do. We'll leave all these PDFs. Oh, so many zip files and stuff. Man, I haven't cleared this out in a long time. Okay. Yeah. Program files. Workspaces. Okay. Okay. I think we're good. So do that. Come back and clear the recycling bin again. So that should clear out to good. Oh, I don't know how many gigs it'll clear, but I mean, I could save all of that depth information. It is valuable information, right? But I don't know. It's hard for me to keep it. That's the thing. The thing that's crazy about the market data thing, right, is that it's not valuable to you until it's valuable. So, like, saving it, yeah, you do want it. If you can save it, you should, but really, we can't. Wait, why is it not? Oh, okay. It's fine. So I haven't heard anything. Oh, you know why? Because my financial juice tab crashed as I was doing all that crap. Okay. I have not seen any major headlines come through on it yet. Can you explain Future Series 777? That's funny. Can you explain what you look for in the spread indicator? Okay, sure. So, with the treasuries in particular, well, I'll talk about treasuries and equities. Okay. So in treasuries, the way that I have it set up is on my DOM. This is 30, 10, and 5. Okay. So if the spread is going this way, that's steep. And if the spread is going down, that's flat. Okay. So when I come over and I look at my chart, it's the same thing. Okay. If the chart is going up and to the right, that's getting steeper. And if it's going down and to the right, it is flatter. Okay. And then if there is a bias in which way the spread is going, I want to note it. So today, I would say we haven't changed the spread too much lately, but it's kind of slightly to the downside, right? Slightly to the downside. So that means flatter. Okay. So first of all, what does that mean? Flatter means, so now let's come back and draw a picture. Okay. Flatter means, here's my yield curve. Let me try that again. Here's like my normal yield curve, and then it got flatter. That means that the short-term interest rates, like the 2s and the 5s, interest rates rose, but the longer-term interest rates, like the 10s and 30s, didn't rise as much. And why is that? That's because they think, well, because the Federal Reserve is raising rates and so on and so forth, that's going to make rates rise in the short term. But in the long term, there's going to be a recession, and then they're going to have to pull it back. And so these longer term rates don't rise as much, right? That's what flatter means. So flatter kind of means the economy is growing, and that means the Federal Reserve is going to have to raise rates in the short term. Okay, that's why inverted yield curve, when it's like this, tends to precede recessions. Okay, so number one, that tells me something about like what the macroeconomic conditions are overall. Okay. But it tells me something about how I need to interpret the order flow, right? So if we are flattening, that means that if we're flattening and we're selling, that means this 5-year is going to go down more than this 30-year does, right? So if I see like a bunch of buying and it runs into an iceberg immediately, normally I'd be like, whoa, that's like a huge iceberg. What's with that? But then I factor in the spread and I can say, oh, well, the spread is flattening. They were probably just flattening there. And so I might have to discount some of that order flow, right? Based on what I know about what the spreads are doing. Okay. So to the S&P 500, it's a similar sort of a thing. So I have over here on this one, this indicator right here, that is NASDAQ relative to the S&P 500, right? So if the NASDAQ is rising relative to the S&P 500, that means that tech stocks are doing really well in risk on environment, right? So I should be expecting to see like interest rates generally going lower, like maybe the treasuries are outright buying, and then I can come over here and I can see the NASDAQ is rising relative to the NASDAQ, right? That's a good time to go and buy. Even if I'm going to be trading ES, that might be a good time to buy because they tend to rise overall, right? So it's telling me something about what's going on in the market. And, if I see it move too much, that can only move so much before it tends to revert back. So that's another kind of thing, is that it can kind of tell me like, oh, okay, this is probably gonna, that correlation might actually work against me in this trade. So maybe I don't want to do it. Like if I want to sell, right? If I want to sell, but it's steepening, right? So that means that you're going to buy this one and sell this one, right? Well, that means that if I want to sorry, I forgot what this scenario even was. But you know, if I want to buy and it's steepening, then I want to buy the 5-year. If I'm buying over here in the 30, I might not get as much, and that kind of works against me. The spread is kind of working against me in the 30-year. So if I only trade the 30-year, I might be more hesitant to take a trade simply because I know that the spread is the spreads and the correlations are working against me, right? Another thing that I can do is I can just put on correlated instruments, right? So the reason I have all these things on this screen is I have my cursor. If you come into NinjaTrader, you can turn global, no time scroll, right? So now I can kind of look and I can say, okay, there was a move here. What else was moving at that time? Right? And then I can kind of sort out. So I can see here the treasuries, they moved down a little bit. Maybe a little bit of correlation with the Japanese yen. A little bit of correlation with the Japanese yen right now. So Lagarde is saying still have ground to cover if baseline stands, will likely hike in July. But treasuries are selling on that a little bit. So I really don't like being in a position when there's like a live speaker like this. It sure seems to me like the likely outcome though is selling in the treasuries though, yeah. What is it, 3D depth? Yeah, so it's like the thing that I saw is it's like you're moving down a hallway and then here's a block that's like, you know, the level 2, and then it changed and got higher, and so it looks like that. So like typically when you do like a what, did I have one open, do I? When I open up one of these Vista charts things, right? I signify how much liquidity there was at each level using color. And the brighter the color is, the more liquidity was there, right? Well, this 3D one that they're talking about, they represent it by how high it is in the 3D space, right? Because now you've got 3 axes to work with. So that's why I'm saying it's showing you the same thing, but it's still cool. It's still cool. Thanks for the info. Good. I'm glad that sufficiently answered your question. We believe there is more restriction coming driven by the labor market. Wouldn't take moving at consecutive meetings off the table. I mean, I'm really tempted to just buy micro yields here, but now that always goes badly for me when I try and do something while there's live speaker. In fact, it's often the case that like, yeah, we should sell off here, but like it only does that like as they're speaking and they say it, and then like it goes the other way the whole rest of the session. Oh man, now it really is moving. Although the micros aren't being as sensitive there because they just moved like what, 4 or 5 ticks down, and the micro yields have barely moved. Micro moves only did like 5 ticks. Some iceberging at 27. By the way, where are we relative to yesterday? Just to kind of catch my bearings. That's right. Okay, so the lowest I got was 24.5 yesterday. So we're almost to those lows. This is not backing off, though. Yeah, it's not a Powell speech per se. It's like a live economic forum where they'll ask questions and then everybody on the panel gets to answer. I'm having a really hard time sitting on my hands here. They didn't quite get to yesterday's lows though. Stop putting, maybe I should be showing it live, but I'm getting what we need from the new Squawk and Twitter and stuff. Bard saying I'm not considering a rate pause at the moment. But look, the treasuries did come back there quite excessively. See, this is exactly why I didn't take a trade in that. I was seriously considering it though. I was very seriously considering it. Oh man, this is really coming back. What the heck? Wow. This is gonna be this is a little bit zany. So the thing that I think is really weird about that one is that I didn't hear anything dovish on the news squawk, right? Like they're talking. The market may have picked up on something that the news squawk didn't necessarily emphasize, or it could just be backwash. I suppose if we really wanted to sell, we have a better opportunity to do here, especially now that we're like back at the point of control and everything. You know, like in this situation, if I could sell it, you know what? I'm really concerned about. I'm really concerned about trying to take a trade on my live account during this. So let's do it over here on his sim account. This is an experiment. That is an experiment, but for fun. Because I do think overall it's probably still a sell. So, in terms of like other traders, I'd be really careful about getting too drawn in by this trader, that trader, and how good are they, and that sort of a thing. Because it's just kind of like a never-ending rabbit hole that never resolves itself, right? Because past performance is not indicative of future results. So really what you want to pay attention to is like, what are they actually saying, right? And there's kind of three main criterias that I would judge them by. So number one, do they have reliable information that you can verify is true, right? Like it's backed by empirical evidence, etc., right? Okay. The second is, do they have relevant information? Are the things that they are saying actually relevant to you or to being able to trade, right? And then the last one is how rare is the knowledge, right? Are they saying something that not very many other people are saying, right? Because if you get something that, you know, this is what I think my channel is, I'm giving you information that you can verify is true because I'm talking about well-established quantitative information from empirical studies, okay? It's very relevant to what we're doing in trading, and nobody else in the retail day trading space talks about it, right? So that's why I think that my content here on this YouTube channel is very, very valuable, right? So the way that most retail traders approach it is, okay, but who's making the most? And I want to go and follow that person. And I think what you're going to find is that tends not to be a very good indication of how effective how much following them will help you. You know? Do you know for how long Powell will be? No, I'm not sure. So on this one, I'll take 2 ticks on the one contract if I can. And maybe do a little bit of, because it's going back and forth here across these prices now quite a bit. What, that's how people look at things? Wow. I mean, the whole thing is that for most, okay, so like woodworking, okay? If I want to learn more about woodworking, something that would make a lot of sense is to go and find a woodworker that has made a lot of money from doing it and learn the things that they've done that have kind of given them an edge in the woodworking world, right? That would totally work. You know, some of woodworking is like, there's competition, but you only have to compete against the other people in your local area, right? Retail trading is not the same thing because anything that is like widely known becomes useless. Well, not useless, but if everybody knows it, it can't be an edge, right? So that's why you kind of need all 3 things. You need verifiable information, you need relevant information, and you need rare information. For some reason, I don't know why people don't understand this when they come in, but I guess it's not something that I can really fathom anymore because we know these things, you know? Okay. There we go. And do that again if I can. Okay. That one kind of came up there a little bit too easily, so we'll see how this one goes. I might need to back off a little bit on trying to aggressively trade this range. Why do you assume retail traders want success? They do want success. They wouldn't. You knew we wouldn't do that. Listen, you don't wake up at 5:30, put your money at risk and all these other things if you don't want success. But the reality is that most people just don't know what they've got to do to be able to find it. And that's often the problem in a competitive game, you know? I mean, the thing that I think makes day trading so unique is that it's extremely competitive, but it's also entirely it happens entirely in the intellectual realm, right? It's all about what you know and the decisions that you make. 100%, right? Like other things that I would think about that are competitive, they usually involve some sort of a physical aspect, right? Like basketball, right? You got to be good at shooting the ball. You got to be athletic. Your body needs to be in shape. These sorts of things, right? Day trading, for the most part, it's entirely about the information that you have and the decisions you make based off of that information. For some large institutional traders, they might have some like quote unquote physical advantages, like faster systems. They might be able to hold the physical commodity cheaper than other people. But for retail traders, it's an intellectual game, right? It's like chess. Yeah, I think that chess would be an apt comparison. It's competitive, but it's purely in the intellectual realm. It's kind of interesting with chess, like most people know how to play chess, but if you've actually sat down and studied chess at all, you probably destroy like 95% of people, right? That have only just learned the game and don't know any of those things, right? But it's not going to win you a world championship, which is like the comparison. So you need to be successful in retail trading. This has kind of been an interesting area, hasn't it? Hard for me to sort how much. So come back and look at the cumulative delta on this, man. Isn't that interesting? So like there was some pretty excessive selling. I don't know if it was any one comment, maybe as much as all of them were just being hawkish, right? But like, look, hardly any volume on the other side. Like they didn't buy it back or anything like that. It just completely retraced that on its own because there was no liquidity. There was no liquidity. So that's how I'm able to like, take a tick out of this range over and over again. It's kind of a risky thing though, because we could totally like bust out one way or the other, right? And I'm betting on it busting down. There was actually a little bit of buying there that concerns me, but it's a sim, keep calm. It's a sim trade, so I can just kind of relax. Manufacturing does not give great hope for a strong recovery. I don't know. How much does the manufacturing actually matter in the Western world? I don't know. Because it seems like manufacturing has just been dismal for such a long time, and like the economy doesn't seem to care. That's a little bit higher. So if we start, well, we kind of already, let's say we already kissed it. 131.01 too much above that, and I think that this market starts to get a little stressed out. I certainly would be. I'm going to be stressed out if it does that. Have you done any studies on higher time frames to see how it affects intraday, if any effect at all, in your opinion? I'm not sure what you mean. I would say that if you're looking for some sort of like a predictive quote unquote signal, that you're probably more likely to find something that's actually really a thing on a high time frame. Higher time frames are super tiny short time frames. But the super tiny short time frame ones probably mean like it actually is a thing, but you're not the one that's going to make money from it, right? Example, well, so for instance, commodities have a tendency, well, okay, so like on a higher time frame, momentum strategies, right? You can come in, you look at all of the different assets, buy the ones that are up the most in the time period and sell the ones that are down the most in the time period, and that tends to be a profitable strategy on a high time frame, right? It's like all of these portfolio hedge fund types of strategies that we know exist. Right. Those are sorts of things that exist at higher time frames, and I've never found anything even remotely close to that on a short time frame. On an intraday time frame, let's say. Well, now it's just kind of chilling at 113 even. I could try working the position from there. If I hadn't have tried doing that range a second time, I would be able to do that. I'd be able to do that a lot more confidently, huh? So maybe it was a bad call. Oh, that's funny. I hadn't seen my Discord bot ban anybody for impersonating me for a few days, and there was one came in this morning. I was hoping maybe they were giving up. Okay, it's coming. No, maybe not. Well, I was getting hopeful that maybe it was going to come back across, but it didn't. Oh, it was my phone. I thought that I heard my camera do something weird, and I'm like, what was that about? I think it was actually my phone. Oh, okay, cool. on my Proton Mail account, I've been trying to keep it like clean on the subscriptions, but I signed up for something and I'm starting to get all of these newsletters about something else. I'm like, crap, I screwed up. Maybe I need to start paying money for Proton Mail so that I can get like the filters and stuff and keep my inbox clean. Because my Gmail has so much junk in it, it's practically useless. But that's something it's funny to think about, because I remember when Gmail was created as a project. I created a Gmail account like the day it went public. I mean, there was like a beta testing time before that, but like from the time that it was public, I was on Gmail. The other day, because it gave me a notification that like I was running out of space on my Google account. So I'm like, oh, I gotta delete a bunch of email, right? So I tried to delete everything that was older than 5 years. And like what I would do is I'd go in and I'd make a filter to select like all of those messages. And it could only delete like a few hundred at a time or something like that. So I had to sit there for like an hour and go through this process of like create the filter, select them all, click delete, see how many it actually ended up getting, over and over and over again. But I did eventually give myself enough of a buffer zone that I don't think I'll need to come in and clear anything for a while. Probably Google's not going to create very good tools to help you clean up your mailbox because they want you to buy more space, right? So. It did not fill me there. Came down there, but nobody hit it. Seems like the market is reacting more to the Japanese central bank comments than, or Ueda's comments than the others, but I don't know. That might just be coincidence. I watched an interview of Morgan Stanley, the office, and looked at one of the three strategies. One was compression and expansion trades. Did you see? Nope, not really. I didn't get that deep into this. So the people that I talked to were primarily engaged in execution. So anything that would be like a hedge fund kind of a strategy were things that I was not involved in. I really want to get into that stuff more though. I'm thinking that I build up my stock account a little bit more and try and do some more hedge fund type strategies. So Come on, hit me. Hit me. How do you use ATR effectively? Well, so first of all, ATR gives you a pretty good idea of what the volatility at that time is like, right? So a good rule is like if you can catch 25% of the ATR on a day, you're doing pretty good as like a scalper. Okay. You can also kind of, volatility tends to cluster. So if you just had a day that like really outperformed the ATR, you're probably likely to see more days like that in the near future, right? Another thing is that when the ATR gets too compressed, so I don't know if that's what he is talking about, compression and expansion, I don't know. But one thing that does kind of tend to happen is that when the volatility gets squeezed too much, you'll get an explosion in volatility. So you can also kind of watch that. I remember watching that in like 2017, 2018, and seeing that volatility get compressed and compressed and compressed. And it was like just knowing that like at some point, all these people that keep shorting the VIX are going to just get slaughtered. And sure enough, they did. And there was, just like a quant apocalypse and total chaos in the markets for a month, just kind of out of nowhere. So. Well, I did finally get built. I'm actually kind of really glad that I took this on Sim instead of trying a live account here, because if it was the live account, probably wouldn't count for very much. And there was like some good trading in range there. I don't think I was perfect. I think that, I shouldn't have taken the one contract there and waited for, taking it when it came back up here to like 113.01. And then I could have taken that to 30.5 instead of like feeling like I need to catch the two. But probably if I had done the one, then I would have a hard time getting filled at that spot instead, because they're clearly watching me and are like, well, we don't want to fill Seth. Oh my gosh, that kind of like haze of sleepiness kind of just hit me. I wish I knew what caused that. What's with that 2700 at 30.5? What is this event called anyways? I'm going to say tight, but volatile. Or let's say volatile, but tight. Volatile, but tight action during ECB forum. Uh-oh. Financial Juice, the Financial Juice didn't turn his microphone down all the way. Oh boy, what's this? The Babylon Bee. 8 disturbing signs that a president is planning to become an oppressive dictator. That does not sound like a Babylon Bee kind of video. Oh my gosh, and now he just talked and it was way too loud. Has an evil henchwoman that chuckles at questions about human tragedy. Oh gosh. Sniffs hair. Oh man. You know, I kind of missed this 10 minutes ago. Nick Timmerell's Powell. Most Fed officials thought another 50 basis points in a hike would be warranted this year. The reason for that was if you look at the data over the last quarter, what you see is stronger than expected growth, higher than expected labor markets, and higher than expected inflation. Really, policy hasn't been restrictive for very long. We haven't been there at restrictive levels for very long, so we believe there's more restriction coming. Bottom line is policy has not been restrictive enough for long enough to see those effects. In other words, the recession is still coming. It's you know, we haven't been trying to destroy the economy long enough. Oh my gosh, too loud, Financial Juice. There we go. Fixed it. Well, I think we got about 40 minutes left, so I will leave this last contract on. It's kind of looking to me, though, like it's not interested in doing much now, huh? That ECB forum has been going for an hour now. I mean, usually something like that is, usually something like that is an hour. But we'll see. I don't really know. Oh, I didn't know. I didn't know the guy's name was Jamie. Okay. J-A-M-E? Is that a British thing? Is that it? Help me out here, guys. Is that a British name like J-A-M-E? Yeah, uptick. ChatGPT says it's Hebrew. Really? I don't know. It was a little tick up. So it's kind of funny because we're coming into this period where like even a tick up or down like matters now, but I think I found my UPS. I'll do that after the stream. We still got 30 minutes left, guys. Buzz, the biblical meaning is to deceive or defraud. Wait, what? Whoa, what is that? Iceberg 3800 at 31.5? Okay. I changed my mind. I don't want to be involved in this anymore. I'll tell you what. You let me out here, and then you can turn around and go back to the lows of the day and cause this amazing trend that I miss out on, okay? Don't name your next kid that. No, I think I'm done with kids. I don't remember what the names even mean. Aha. Okay. Go do it. Go do it. Let's reset things there into the middle. I don't know. It should. What do you guys think about that trade? I didn't get it to run, but I still played that range pretty okay. Well, there's another tick down. Back to the lower end of the range, at least. Did it fall? No, not quite. Needs to trade below 29. So there's the oil stocks. Yeah, there's they're going. It was just like I said, right? It was like, oh, I got out, and now what did they do? They trend to the bottom. There you go. That's what I need. That's a UPS. Huge. That would keep me going like all day. Doesn't look like that's rack mountable though. So, I don't think that will work. So use volume. Well, they did, you know, that move that we had to the downside yesterday was really interesting because, you know, there was a really big move off of that economic data that we had. But after we left, it really died down. Like there was not much activity after that, you know? You might need a transport truck. Yeah. I found another one. I don't know what kind of the UPS that I have. I don't know how many what the size is on it, like how much time it would give me. I found one that's 3,000 that I think would be okay though. Looks like it needs to be cleaned up a little bit. But we can do that. How much RAM on my computer? I'm running 64. Oh, that's interesting. Oh, Eric's coming back. No, they went and did that just to make me FOMO and be like, okay, maybe we can get Seth to go short again. But I didn't bite, so they came back. 250. I am thinking about doing 128 or 256 on my next PC, but we'll see. News Squawk, anyone know what the point of this panel discussion so far has been? Question mark. Oh man, Taylor Swift could be getting close to entering her billionaire era thanks to ticket sales from Eras Tour. I don't get the Taylor Swift thing, I really don't. But that's okay, I don't have to. MTA, which I think is Manhattan Transport Authority, says smoke from Canadian wildfires is once again expected to impact our area this week. If you can, limit your time outdoors when air quality worsens. Oh man, Bloomberg, a middle-aged Texan millionaire has a plan to make his body 18 years old again, and all it takes is a $2 million a year and a team of 30 doctors. It's been raining for 5 days. It's awfully dry up there, though. I don't think that those wildfires ever died out. I think the winds just shifted, right? Oh man, S&P is hopping here, isn't it? Are they buying off of stuff that the central banks have said? I don't know. Why don't we start a Forex brokerage? Why would I start a Forex brokerage? That would never work. We'd be all out trying to go and get customers, and then they'd pull up the 1,000 times I've said on this stream that trading Forex isn't a very good idea. Yeah. I don't think that one would go over very well. For the commissions. You know what I want to do? So here was my thinking this morning, okay? The laws and everything have kind of opened the way for an accredited investor test. So like right now, if you want to invest in certain types of like private offerings and hedge funds and things like this, you have to be an accredited investor. Okay. So, they're going to make a test, is my understanding, is they're going to make a test that will probably be a lot like the Series 65, but much more slimmed down. And you take the test, and then you're allowed to invest in those sorts of things, right? Well, the thing is that those, like if you, right now, I could do that. Like with the Series 65, I should go and start my business. I don't know what we call it, excessive capital or something like that, right? So I go and I make excessive capital, and then I could invest in these hedge funds, right? But most hedge funds have like a minimum required investment, right? So there's not very many places that you can go that will just let you put $1,000 in, right? But if there's a test and there's this influx of people that can invest in those sorts of things, but they don't have a whole lot of money to invest in, then we could take advantage of it. We could make a fund and we could say, we're going to open a fund. This is our strategy. We're only going to accept X amount of capitalization. We will prioritize people that have this test and are only investing $1,000. So you get as many people as possible into it. It would be a completely different style of hedge fund, essentially. There could be some real possibility in all this. And I think that I am well positioned to do this. I don't know if anybody else is, because I already have the investment advisor certification. I'm going to get the commodities trading advisor ones here too, you know. And, already have a little bit of a following set up. How much money is needed? Well, so I think that in order to really do this, number one, we don't need to do it today because the test's not available, right? But what we really need is we need higher time frame type of strategies, right? We'd want to sort something out that, because I could just make a CTA and say, okay, I'll trade your guys' money, right? I'll make it, you take the test and then contribute $1,000 and then we trade that, right? That's possible. I don't know if it's a good idea, but we could do that. But I think that it would be better to do kind of hedge fund level strategies. Could be interesting, right? Need to network with more rich people. That's what I need to do. What did you hear about Elon's next project? For Canadians with AI, where we don't have to work anymore and you earn $6,000 a day? No, come on. Okay. I have not heard about that. This is the thing. I've seen this all over the place, right? Where everybody's like, yep, your programmers are all going to be out of a job soon. I really don't think it's going to work that way. It could be the case that you don't need as many programmers, right? I think that what's going to happen is the top programmers are still going to be there and going to be even more in demand, and you're just going to need to have deeper skills, you know? But there's all these people that are convinced that, yep, all the computer jobs are going away, and you're all gonna have to learn how to build things. That you're all gonna build houses or something like that. Would be an interesting world, but I don't think that's the way that it's gonna play out. The more that the AIs are able to do on the computer world, the more opportunity it will unlock for humans to just do more advanced stuff. And I'm not convinced this argument that it's going to result in less jobs or worse jobs, because that's literally never the way it's ever worked out throughout all of human history. Could open up the opportunity for some people to maybe make passive income, though, off of the labor of robot slaves. Sure. You saw a commercial? You'd have to tell me like the name of it so that I could search for something. It was a commercial on the stream. That's interesting. Should I send us to a commercial right now? That would insert ad. You know what? I've never done that before. I should insert an ad before the end of the stream. If I insert an ad here, does everybody see the same ad? Let's not do it right now. Let's do it like another day when it's earlier in the stream and stuff, you know? It's been a pretty sparse stream this morning. You guys we had so many early questions early on, and then it was like answered everybody's questions, and I see how it works is you get all of the information that you want from me at the beginning of the stream, and then you disappear. That's okay. That's probably the way it should be, isn't it? Maybe not. 3745. Well, we still got like 8 minutes. Overall, like there was some pretty volatile movement at the beginning of that forum and everything, but like really the treasuries have been really tight today. It's been very tight today. I went to look for some farm land for a work project, and the owner was a hillbilly, and when he went to get his brother to talk details, I swear it was the Better Call Saul lawyer. And I need to watch that show. You know what? I don't really want to get into a series or anything. I think that I've gone through a time period where we were watching shows and things like that, and so I wasn't really doing a whole lot of like work in the evenings. I need to get back into that. Although lately it's been, I watch the kids inside so that my wife can do gardening, which I feel bad about, but she wants, I think that's her thing. I think, they say that like when you become 30, 35, that you have to become an expert in either World War II history or barbecuing, right? Well, I think women go through the same thing, but it's like gardening or home crafts. And she did the home crafts one for a while. Now she's on the gardening track. Regarding his neighbors, we have to create an illusion to satisfy the neighbor. What? I don't know if that sounds like a property I want to buy. Owl's still talking, apparently. It really is interesting how that move worked. I wonder if it was kind of like a fat finger. Like somebody heard a thing in there and they're like, oh, this is a big deal. They traded it. And then, nobody else was actually interested in trading it. Yeah, apparently he's still talking live. Oh my gosh. So I've just kind of been browsing around the online here. Okay, so there was a thread on Reddit, futures trading. As a trader, how do you prevent burnout? Feeling extremely stressed and burnt out as it is 14 to 17 hours of screen time. Any tips would be appreciated. Are you kidding me? 14 to 17 hours a day of trading? Yeah, of course you're stressed out. Like, that is crazy. That is crazy. Let's see here. So there was a little bit of back and forth here. So I said the most active market hours is 8:20 to 11:30 Eastern time. 3 hours of focus trading is more than enough. Trading 14 to 17 hours of screen time a day is completely unnecessary and more than just a little crazy. That's what I said. This person, not sure. Not when you are not pro and still practicing. What the hell? So you're not a pro and you need to practice and you get 14 to 17 hours a day? I don't know. I'm going to push back on this a little bit. Understanding how your setup works within specific timeframes is much more important than having a setup that works across all timeframes. The latter is near impossible, while the former is a much more achievable goal. Of course he's talking about patterns. This guy, when you're new, you should definitely be putting 10 plus hours in every day. No. See, probably, who knows? I don't think so. No. Just some random Redditor. Anyways, so like the thread has 14 upvotes, but my comment has 58.6 upvotes, so I guess I'm happy about that. I haven't had a good comment pop off for a while on Reddit. I'm still kind of sitting over there like, why am I still on Reddit? But like, there's nothing better to do. I used to feel like I could spend forever on the internet, you know, and there was just not enough time for me to read everything that I wanted. And these days, it's not that at all. It's like I watched TikTok there because I'm bored and I'm watching the kids, but that was a waste of time, you know? Well, that was the ding. I think it's time for me to get going here, guys. So LaGuard is gonna give closing remarks here in a bit. And then, so that's at the top of the hour, and then that will be the end of that. So, with that forum over, we might see a shift in the way the market goes. I don't know if the treasury market is really going to do anything more today, though. This kind of, I think, sets us up interestingly for tomorrow and Friday. Because again, there are a lot of quarterly rebalancing flows. And we haven't really seen any of that in the treasury market. So could provide some good trades for us Thursday and Friday. We'll see. But I'm going to get going. So I will see you guys tomorrow. In the meantime, stay excellent.